Good evening and welcome to Legal Tech Live, episode 112. I'm here with Michael D. Tam from Craft Ventures. I'm sorry, Michael, but as I've been sharing that you were coming on the show, I've been using your Twitter handle, which was Michael D. Tam. So I got really used to typing in Michael D. Tam this week. Michael is a principal at Craft on the investment team. He's based in Los Angeles. Prior to joining Craft, he was an investor at Crosscut, where he led investments and participated on the boards of consumer and enterprise companies. As an operator, Michael managed Uber's business in Southern California markets and launched L, a direct-to-consumer brand acquired by Procter Gamble. Michael began his career in venture at Bullpen Capital. Previously, he worked at BofA Merrill Lynch's tech investment banking group and began his career at PwC. Michael, thank you for joining the show. We really appreciate it. People in legal technology are desperate for investment input, and I really appreciate you being here.
Of course.
Tell us, I mean, it's great. You've got a great investment background there. Can you give us just like an overview of what got you into venture and then sort of your investment thesis? That'd be great.
Yeah. What got me into venture? I was very much intentional about wanting to carve a path out to venture. It kind of culminated or started when I was in business school at U Chicago and really formally learned about venture capital from classmates who were doing internships and trying to get into it, build a career out of grad school in venture. With the L, which I helped sort of start pre-business school, it was my first entrepreneurial experience. Taking a step back, my first job out of undergrad was in consulting and had this passion for wanting to start a for-profit company with an impact, and ultimately got connected to Talia, who at the time was a Red Cross photojournalist, and had this vision to start L, which at the time, this is 2010, Tom's and Warby Parker were starting to gain some traction and press, and so that was the inspiration. And long story short, L got me sort of addicted to early stage company building, and I was pitching angel investors and VCs without really knowing who they actually were, and that as among many other things that comes with building early stage companies, and really didn't realize who they were until fast forwarding to when I was in business school and got exposed to the sort of concept of venture through classmates, the sort of intersection of investing and early stage company building. And so at that point, this was 2012, 2013, I was just very much focused on wanting to carve out a path into venture. Post business school, 2014, I joined Uber on the biz ops team, ran a few regions in SoCal where I'm still based, launched our vehicle financing program, which became exchange leasing that got acquired by Fair, also here in LA. And while I was at Uber, I just started meeting any investor who would meet with me, meeting people who had some affiliation with venture capital. I really was kind of blindly navigating the ecosystems. I didn't really have a strong network or community in it. And while I was at Uber, I just started moonlighting with Bullpen, who you mentioned. They are a fund currently focused on post-seed, and they really created that stage. And through Bullpen, ultimately landed a full-time role at Crosscut, seed stage focused fund here in LA. And then a little over 2.5 years ago, joined Craft. And so that's kind of the high level journey of what got me here. The thesis at Craft is definitely focused on a bottom-up B2B SaaS and B2B marketplaces. It's less like thematic and more, I think, framework driven. Mm-hmm. And I can unpack that,
please,
as we go. Yeah, I can do that now.
Yeah.
The focus on that stems from one. Let me just take a step back and give you the quick Craft overview.
Sure.
Craft was started late 2017 by Bill Lee and David Sachs. Jeff Floor is another general partner here, and Sky Dayton is a venture partner. And the through line through all the partners and the team here is we're all former founders and or operators. And that's, the pitch to founders who ultimately choose to partner with Craft. Jeff started StubHub and sold that to eBay. Sky started Boingo, Earthlink, and Cloud Kitchens. Bill started a company called Remark in the 90s, which was effectively Reddit before Reddit. And David started Yammer and sold that to Microsoft.
And David also he was part of the PayPal mafia and that group, right. Was he?
That's right. He was founding CEO at PayPal. His experience at Yammer, which was one of the first sort of this companies at the forefront of this consumerization of enterprise, used this sales motion and go-to-market approach of going bottom up. And what we mean by that is having, an individual. Today you see that in companies like Box, Dropbox, allowing an individual to, pay for a subscription using either their personal credit card and expensing it at their company, or using their corporate card. Ultimately, though, it's reducing the friction of adoption around that sales motion and sales cycle. And that's a big focus of ours at Craft, and a big part of our thesis is finding companies, especially as we believe that SaaS is only getting started. What may look like a niche market today is only going to become, a much larger market 5 years from now. I think an incumbent like Salesforce has really proven that over the decades. And so we tried to look for characteristics of a product, whether it's existing or in the works, that we think align nicely with that sort of go-to-market approach. And that manifests itself across various industries, including legal tech. So I'll pause there in terms of the intro.
Yeah, that's great. I think it's a great background for us. And as I had mentioned before we got started, and I want to thank our live audience here. We've got Baltimore, Jasmine, and Maureen, and please don't be afraid to ask questions. Seems we're having difficulties, the occasional difficulties with the Facebook live stream. So, please feel free to answer. That's why we do Zoom as well. But Michael, you led around in former guest of the show, and whether or not you want to discuss that, it certainly appealed to me that you had some experience in legal technology. And can you tell us how you analyze an investment, and essentially, we've got a lot of legal tech founders who listen to the podcast who are, we predominantly focus on startups in legal tech. And how do you analyze, and you can do it as a hypothetical, you don't have to tell us about any specific, but what are the kind of main things you're looking for when you're analyzing a business?
Yeah, I'm happy to speak to Trellis as well, and Nicole. So I would say high level, with Trellis, to take a step back, what Trellis is doing, they scrape and provide basically the data set around the state trial court system, county by county, right, and provide analytics for litigants to leverage when they're, in a court case with a specific judge. And our understanding from diligence was, and from speaking with Nicole, that status quo was litigants just kind of talking amongst themselves and getting insights in a very, inefficient manner. And that just felt like a big problem to solve. Nicole had actually built this product for herself as a former litigant and
litigator, as a former litigator.
Yeah. And was using it herself and as a former litigator, and was winning cases with it. And that was, that's not actually typically the case, and was very encouraging as part of the investment. But at a high level, it was a data set that felt very proprietary, that was just not really being addressed by, the incumbents, the Westlaws, the LexisNexis of the world. And the founder market fit was very strong. Nicole clearly was, I've heard her describe a compulsion towards solving this. And that really resonated in our interactions with her, and stays true today. And the product itself was, we had a lot of potential. It was, we invested at the seed stage, but there were a lot of already hooks that we could see. For example, with that bottom up go-to-market sales motion that we described earlier, you can have an individual litigator sign up and enroll and use the product themselves, and then sort of expand within the firm by seats, which is something we love to see as well, and part of our investment thesis. And raise the game, across firms. And so that was all like basically the high level reasons for why we invested in Trellis. And Nicole specifically, besides the compulsion to do it as a former litigator, she just has really, she's a natural at being the CEO. She's very adaptable, nimble, and open to kind of learnings from other companies, but really understands the problem inherently that she's trying to solve. And so that allows just, that's really what we want to see.
Yeah, she's fantastic. She's been a guest on the show at least twice. She's been a co-host on the show one other time. So she's been, if you want to go back, folks, and listen, he's discussing, of course, Nicole Clark of Trellis, who's also a sponsor of the show. So we are mutual friends and supporters of each other. So that is her energy is infectious. Is how I've experienced it speaking with her. So, and when you said like the buying the seats, that was, or the ability, to buy more seats, that was from a investment standpoint. Are you thinking like those legal users who come in early on, they have a great experience with it, and now you've got an advocate in-house who may be selling more memberships by word of mouth for you? Is that kind of that thought process?
Yeah. To expand on that, correct. Expansion within your existing team, other colleagues. We've seen this, broadening out beyond legal tech. You might have a product being used by somebody on the sales team, and and everybody's obviously very collaborative. And so there's an incentive to pull in your colleagues on the marketing team or the product team. And that is something we qualitatively like to see, because that drives ACV expansion, annual contract value, and increase in that spend by your customers, which ultimately is, improves economics, improves revenue retention. And these are just one of the few things we pay attention to on the metrics front when we diligence a potential investment.
That's great. And one of our friends of the show, Colin Levy, had asked a question, and we see some investments coming in, some big investments coming into legal tech, but many of us who've been following it for a while don't. It seems slower than in fintech and other enterprise SaaS products, and we think regulation might have to do with some of that. And Colin asked one of the simplest of questions, which maybe some of our founders who are joining us live tonight might be interested in. How do you determine an amount of an investment to make? How is that chosen? When you're
Sorry, go ahead.
Yeah, no, that's essentially it.
It varies by stage. The markets are pretty active, I would say. It's been active since the pandemic, and the average seed round today can range anywhere from 1.5 million to 5 million, and the pre-seed round can be anywhere from a few 100,000, 500,000 up to 1.5 million to 2 million. And a small A these days can be anywhere from 7 million to 10 million. A standard A is, call it 10 to 12, 10 to 15 million. And then we've seen and have led Series A's anywhere from large Series A's anywhere from 15 to 30 million, 35 million even. And we're seeing a lot of growth equity funds and later stage funds as well go earlier and earlier. A portfolio company might go out raising 15 to 20 and get preempted with a round raising 30 to 50. And so the the stages and the round sizes by stage overlap, and they're really anchored, I think, by, I mean, it's kind of intuitive to say out loud, but just the traction of a company. And that can take various forms. Pre-revenue, it might be, if you're a B2B SaaS company, it might be engagement, whether it be DAU, daily active users over monthly active users, that ratio, daily active users over weekly active users, the sort of weighted average annual recurring revenue you have in your pipeline, it's effectively a puzzle that you're putting together by stage. That's effectively what's driving, I think, the amount raised. And then it's like the sort of realities of each round, which is the dilution that the founders are, willing to give up, and the previous rounds raised as well, in the terms of the previous rounds.
Okay. So there's a lot of different elements that go into the actual check size, but there are, it sounds like, some industry standards as well, based on what others are doing. Jasmine here in the Zoom chat says if she has a B2B SaaS company with a bottoms up user acquisition strategy, and she's asking, at what point in terms of either users or revenue do you consider a company to be investment ready at the seed stage?
That's a good question. We typically, because there's always outliers, but we typically like to see some signs of revenue, post revenue, whether that be as sort of early as you're in the midst of pilots, but maybe you have seen organic expansion to other teams within the company that you're in a pilot with, or you're seeing just individuals sign up organically and broaden within their existing teams. The other thing that I should mention too is we pay a lot of attention to the nature of that acquisition, and what I mean by that is, organically, you're seeing a lot of inbound. There's a lot of word of mouth amongst your users, and we can talk more about sort of how we measure that, but qualitatively, that's something that we look at as well, especially at the seed stage. At the seed stage, ideally you're catering to, and you're experimenting, and you're catering to the thesis, who you believe to be your narrow set of potential customers. And so ideally, you have more organic adoption early in the early days, because you should have a better sense of whose problem you're solving, which broadens out as you get later in the company.
Excellent. So there is that some, I'll hear on other podcasts, investment related, about monthly recurring revenue numbers that they're looking at. Is that at the seed stage? Are you really looking at monthly recurring revenue, or are you really looking at is there some revenue coming in and we're having some good user adoption at this point?
Yeah, I mean, it's tough to throw out our sort of arbitrary numbers. I've seen Series A rounds get preempted pre-revenue, which is there's likely more information there that we're unaware of, or maybe there's an existing relationship and the investors have previously backed this founder. For us, I would say, if I had to throw out a number, whether it be MRR or ARR, which is really just driven by whether your contracts are monthly versus annual, somewhere in the 100 to 200K ARR, you then should have, assuming the annual contract value, you have 5-ish or 5 to 10 customers, you can then have enough, maybe a small sample size of data to tinker with around the retention, the engagement, how those customers were acquired. So it's less the dollar amount and more just enough of a data set for us to work with to arrive at some sort of educated opinion, especially at the seed stage, when there's definitely a smaller data set to work with. And there's other ways to augment that data set, whether it be working with folks in our network, our own experiences as former operators, and having our own opinion as well on the space.
That's great. That's excellent information. Great question, Jasmine. Thanks for asking it. And Dev Shiesi, you're here as well. Baltimore, don't be afraid. Maureen, ask some questions. I'm happy to talk, but we will take questions as well. What is Trellis? Have you looked at, I guess is what I want to get at. Have you looked at any other legal technology companies, or were you just, and I don't want to pick on Trellis, I just wonder how often those get in front of you as an investor?
It's a good question. We're not proactively, I would say, for any industry. We may have certain areas of interest, whether it's driven by our own personal experiences, our former experiences as operators, or just engaging with our portfolio and learning from our founders.
Right.
I would say I've met maybe somewhere between 5 and 10 at most potential investments in companies at Craft. Broadly speaking, in the world of like litigation finance, this marketplace, tech-enabled marketplace for stenographers and support services during a court case. We've looked at a lot of, and I don't know if this you mentioned Ironclad in the contract management space. We definitely I haven't, but my colleagues have spent a good amount of time in contract management. And that's a big area of interest for us, I think, just given the potential viral loops and the team expansion and the option of it being the system of record for customers. CRMs for lawyers, so definitely there's no bias against, I would say, legal tech internally. There's just sets of questions and risks that we try to assuage during our diligence, and that's industry by industry. But it's not like a big portion of the sort of deal flow that we look at.
Yeah, and that sounds right. It's still a relatively niche area, and there's a pretty tight-knit group of folks in it. So that's one of the reasons I ask. Devshi has a question for us here. What do you see founders spend their first $1 to $2 million in funding on most often post-seed round? And do you have any high-level recommendations on recruiting a head of sales? Oh, it's 2 questions. That's good. How is that initial, say, $1 to $2 million spent in a seed round, and how do you go about recruiting a good head of sales?
Yeah. Sorry, my camera is having some issues here. So I would say, just to be clear, first money in, first $1 million to $2 million that the company has raised. That's how I'm sort of operating here in terms of my assumption or interpretation of the question. It's mostly headcount. It's mostly just talent. You're hiring your first few set of engineers. You're hiring maybe someone on product. You're essentially building the product. And so that's usually what we see the first sort of uses of funding to be around at the seed stage. Sorry, the second part of that question
was, and how do you, any high level recommendations on recruiting a head of sales?
It's a good question. I don't know if I have, I would say what I've seen in our portfolio is that a head of sales is usually head of sales, whether it's a director level or VP, independent of the title. I would say someone who's like leading up the sales charge is usually brought in after the founder and or founders have closed sales themselves. Right? We're used to seeing founder-led sales even up to the Series A, where the founders have sold, executed contracts, really understand their ideal customer profile, understand the nuances of the sales cycle and the sales motion, and just have a set of initial learnings to pass on to someone who they can now use as an extension to sort of lead that charge. I would say once you have some semblance of a playbook around sales cycle and sales motion, and a thesis on pricing, and an understanding of who you're selling to and the use cases, I think that's a good time just qualitatively to bring in a third, someone to sort of execute on those initial learnings and obviously iterate.
Yeah, I think that's really a really excellent point. The founders that I know who tell me their stories behind, who are still relatively successful, even if they are pre-Series A, a lot of the founder CEOs are still making those sales themselves.
Right.
So, great questions, though, Devshi. Thank you for that. What do you guys focus primarily business B2B, right? B2B SaaS is where you're at. And that's part of your thesis. Why B2B? Is it just the ability for growth there? The enterprise level sales, is that the reason that's the focus at Craft, or your focus?
It's a combination of factors. I would say, one, the team, it's just as given their operating backgrounds, we just understand it a little bit better, and have the tactics and learnings and scars from working at companies in B2B SaaS. Secondly, B2C, business to consumer, it's lightning in a bottle. There's only so many winners as well, and there's I think, heavier reliance on paid acquisition, paid marketing online. There's only so many big winners in B2C, and I feel like there's still a lot of white space in the B2B side, and so it's been a great learning experience too, joining Craft, and really realizing that there's just a ton of opportunity on the B2B SaaS side. And to get it a little bit more detailed, David Sachs, one of the GPs at Craft, has written pretty frequently about this on his Substack around why we like B2B SaaS. One good example that I point to is the opportunity to increase ACV, and whether that annual contract value, which I sort of alluded to earlier, whether that be in the form of adding more seats or feature sets, or adding, and sort of pricing in that manner, which then increases your revenue retention and improves the economics, and all that sort of balances out the upfront costs that may go into acquiring this customer. And that's just not possible with the B2C model, because you're selling to an individual, whether it be subscription to Headspace or a Netflix subscription. There's just not an ability to increase the revenue that you can generate from one customer, whereas with a business, there's many key levers that you can pull to increase that that spend by then. So
with the upsells, essentially, is what you're.
Yeah, the upsell, exactly.
Yeah, that makes sense. I mean, yeah, you're right. I don't hit. There's always a nightmare when for a PR nightmare for Netflix when they start talking about increasing it $1 or $2 a month, right?
Right.
Yeah, that makes good sense. Folks, we're about 30 minutes in tonight. I don't want to keep David all night, so I'm going to ask that he stick around for maybe 10 to 15 minutes more. If you have some more questions, please get those in. Where would you like to see, when you invest in a startup at early stage, what are your thoughts? Are you guys active investors? Are you actively supporting a founder in the early stages and interacting with them regularly, or are you generally hands off? How does that work for you?
Yeah, whenever I get asked this by founders, my go-to response is ultimately it's dependent on the founder. Every founder's preference is different, so that's the first filter. But ultimately, we'd love to be as hands-on as to the extent that the founder, thinks it's worthwhile. And so when I describe how craft gets involved with our portfolio, the analogy I say is helping them play the metaphorical chessboard. And there's just so many unpredictable challenges that come up in early stage company. When early stage, just to align on terminology, we're I think pre-series B,
Okay.
all the way down to you're launching the product.
Okay.
And I've seen and have been involved in conversations with our founders and seen our GPs get into a whiteboard session thinking about how do you optimize your funnel? How are you even thinking about your funnel? How are you defining your sales pipeline? How do you structure your sales team and the right optimize commission structures in an environment where the sales team is remote? How do you think about pricing? Should you go freemium versus free trial? And what are the different circumstances when you decide one versus the other? What are the KPIs that you might consider when going out to market? And all the usual things that investors talk about around hiring and customer intros and fundraise support. But for me, I think the differentiator with craft, which derives from everybody having been a former operator and founder, is getting really into the weeds around tactics by stage. And I think the collaborate, that's the part, frankly, I love the most is working with founders. And I think the team here at Craft definitely sort of feels the same, and we sort of executed that with our founders. But it's the nature of support can take many forms in startups.
Yeah. There's a why it's a broad question just to kind of see where you go there. But I almost feel like I'd be remiss to ask what the experience in investing has been like in venture investing during COVID. I'm imagining you're taking more meetings like you and I are having right now through Zoom, right? More discussions with founders about investing in their company this way. Has that been, I see certain numbers when I read about it and listen to other podcasts on it, and I see that that it's on fire, that Valley's on fire, or California venture investing's on fire. Are you noticing that? Are things pretty exciting right now? A lot of development, a lot of deal flow, or have you noticed any slowing as a result of COVID?
It's definitely accelerated. We spent March 2020 going back to our founders, making sure that they were supported, making sure that we were helping them extend runway to navigate, the uncertainties that we just couldn't predict at that time. And then mid-April, early April, we hit the ground running in terms of continuing to back founders all remote. We were already somewhat remote before COVID. And so the team has really, I think, thrived in this Zoom type of environment. And I think if you ask any investor, they would say that the market has certainly accelerated. And we've seen that both by the nature of everyone sort of living online. And I think it's a great thing because it almost levels the playing field and improves access, because no longer are folks just hanging out in their usual cliques in real life, and you have to be a little bit more intentional about it. And then also, I mentioned this earlier, a lot of these later stage growth equity funds are coming in earlier stage, and that's really accelerated funding processes as well. So I think it's a great time to be a founder. It's a great time to be raising if you're a B2B SaaS company. And I don't know, I have no line of sight to if things will stop or if things will revert back to what it was pre-COVID.
Right. It's good information. It's good insight from somebody who's got their finger on a heartbeat here, because I read the stuff. I don't know. You always wonder if you take it with a grain of salt or if there seems to be a continuing trend here. If we could all figure out when something was going to stop, that would put us in a really great position. how do you think, you say that there was the Zoom, the COVID has kind of leveled the playing field, provided, are you seeing really innovative new ideas now in the market, do you think? Some people maybe lost positions for a time, and sometimes I get excited over that because I think, I remember the 2008 crash and when people were losing their jobs, and we got some pretty fantastic advancements when really great talent is now all of a sudden unemployed. Sometimes we get some great creations. Are you experiencing anything similar to that now? Are you seeing some really exciting investment opportunities?
The short answer is yes. Yeah, I think constraints and pressure creates innovation is the high level, cliche to me. I definitely am inspired and motivated by the founders who continue to sort of execute, especially in this sort of type of environment where it's just difficult for everybody. And especially on the B2B front, we've talked about a lot about our interest in B2B SaaS. We also have a big interest in B2B marketplaces.
Mm-hmm.
And just seeing I think it's just the distribution and the access to technology has just allowed people to more easily try to solve a problem that, kind of going back to Nicole Clark's story of Trellis, like,
Sure.
make the leap. She was doing it on her own as a former litigator, like solving her own cases. And now she's built a company around it, which is like, how awesome is that? It's just magical to kind of see. And so I would imagine there's many other folks maybe in a similar position as she was at her law firm, at their current employer, maybe doing something similar, haven't yet found the impetus for making that leap. But we're seeing it all day. And across various sectors. And so I think it's a great time to both be a founder and also be an investor in the private markets.
Yeah, it's pretty exciting. I mean, the inquiries I get from people, I see some pretty fantastic stuff, folks coming out, wanting to come on a podcast and get their name out, and it's exciting. Do you have any seed stage recommendations for the founders out there? Any like that's your go-to recommendations? Like maybe you got top three, or what do you tell them when you kind of maybe that seed stage check, and give it what kind of guidance you give for that stage?
Focus. It's an easy one, but also one that I like, with myself included, can easily sort of lose sight on. Mm-hmm. The ambition can sometimes get the best of you, and there's so much to do, so many problems to solve, so much feedback anecdotally you might get from a pilot customer. They maybe want you to build a one-off thing for them, using one integration, but that's not applicable to who you think your ideal customer profile may be, or there's a one-off use case. And so but being able to like read the tea leaves and interpret whether this is a one-off instance or is this a rabbit hole that you need to go down as a founder, I think is the magic of it all, of being someone who's creating a new product that just hasn't previously existed and creating a category. So I would say balancing the focus with still understanding the nuance of the use cases you're solving and continuing to innovate. That's kind of the magic and also the challenge of seed stage. You're continuing to learn. We describe it as sort of, especially pre-revenue, we describe it as navigating the wilderness or penny gap. You're collecting feedback from your customers. You're figuring out how to structure your pricing model around it. You're figuring out the sales motion and how do you go to market. And so being able to focus and hone in on the priorities at hand is I would say the main recommendation I would give.
Sounds like how do you, is this great user feedback, or is this feature creep, or that kind of thing? It sounds like is what you're advising.
Yep.
Yeah.
Being able to really decide between the two. And every day you're making a decision. and an investment of your time and your team's time. And so that compounds over time.
Yeah. Yeah. That's excellent. Well, I thank you, Michael. I don't want to keep you. I told you I'd keep it about 40, 45 minutes. I know the dog's there next to you and didn't actually make an appearance, which is interesting. Sometimes they do, and we're used to it. It's fine. Uh, Michael, how do folks get in touch with you? If they, they like what you had to say on the show and they want to reach out, are you open to that?
Yeah, my email, michael@craftventures.com. My Twitter handle, Michael D. Tam. Pretty accessible. And will do my best to respond to emails in a timely manner.
Great. And how about just on cold outreach? Is that something you're open to?
Yeah.
Yeah. That
of course. Yeah.
And is there a recommendation for that? Send me a slide deck, or is there something you prefer for that?
I would say just synthesizing like what the business is, the high level metrics, that whatever you're comfortable sharing, so that we can sort of decide, make a decision on whether to spend time, because it's, there's also just wanting to be cognizant of everyone else's time and the founder's time. But yeah, the business overview, where you are today, what problem you're solving, I think is a good concise summary.
Excellent. That's fantastic. Fantastic suggestion. What I'll do is don't disappear when we stop recording. I'll give you some background. But Michael, it's been great, and I hope maybe one day in 6 months or a year I'd be able to reach out to you again and have you back on, if that's if it was not too painful for you.
Not at all.
Great. Thanks so much. And Maureen says thanks. Very informative. Thanks, Maureen.
Thanks, Maureen.
Have a wonderful night, everybody. And we'll see you next week with Armin Margarian of Appear.me. So stay tuned for that. He's built a really great company for legal appearances. Thank you, folks. Bye-bye.